Hi, I'm Vishwa. This is the second part of the Overbought and Oversold series. In our previous video, we covered all the basics of the overbought and oversold condition. We also talked about different types of overbought and oversold. And along with that, we also saw how to identify trend reversals using these conditions. Now, in this video, we're going to talk about how to find the trend continuation using the same overbought and oversold condition. So let's get started. Oh, and in case if you missed watching the part 1 of this video, I'm adding a link to it in the description below. I recommend that you first watch the part 1 and then continue with this video so that you can understand the concept in a much better way. In the previous video, we discussed about the trend reversal. In other words, we saw how to identify a trend climax. But in this video, it's just the opposite. We're going to talk about how to identify the beginning of a trend. So how do we do it? Let's begin with the trend. When the price moves continuously in one direction, then we call it a trend, right? So this is the same logic we will apply to identify the trend. But for the price to continue in the direction of the trend must be strong, correct? So this is the second thing that we will find, the strength of the current trend. So how do we do it? Well, there are many ways to identify a trend, but in here we're going to use one of the simplest methods to do it. So what we're going to do is check whether the price is continuously moving in the same direction for 7 consecutive days. And also check whether all of these 7 candles are continuously making lower highs or higher lows. If it does so, then we have a trend. For example, on a downtrend, you will see price making lower highs continuously for 7 days, and on an uptrend you will see the price making higher lows continuously for 7 days. So now that we have identified the trend, let's go on and see how to identify its strength. Doing this is pretty simple. When the price is in downtrend, just check whether all of these 7 candles are bearish. If so, then we can take that as a strong downtrend. Or if the price is an uptrend, then check whether all of these 7 candles are bullish candles. If so, then we can take that as a strong uptrend. So now that we know how to identify the trend and how to identify its strength, let's go on to see some examples so that we can get a clear understanding of the idea. In our first example, our downtrend is right here. And here we have 7 candles continuously making lower highs, and also all of these 7 candles are bearish candles. So that confirms our trend and its strength. So here we have our trend continuation pattern. And the price did continue on its downtrend. But if you take a look at this area, we see a small consolidation here before the price continued on its downtrend. And this is a pretty common sight when you use this trend continuation pattern. You will always find your pattern followed by a small consolidation, and only then the trend will continue in its direction. So in this case, at this consolidation, we see a triangle pattern. And upon breaking out of this triangle pattern, the price continued to fall. So if you're looking to go for short, preferably you can do it upon the breakout of this triangle pattern. Next example. In this example, our trend continuation pattern is right here. If you take a look at this example, once again, you will see that the price consolidated lightly before going down. And one more important thing I would like to point out here is that always look for consolidation when you're using this pattern. In case if the price continues without any consolidation or pullback, it's better that you avoid that trade. Because, as we have already mentioned in the part 1, when the price moves continuously in one direction without any pullback, it means that the trend is weak. So, coming back, in this example, we see a channel pattern at this consolidation area. So ideally, our entry would be upon breakout of this channel pattern. And another thing I would like to point out in this example is that if you take a look at this place, you could see a breakaway gap being formed along with our trend continuation pattern. And as many of you would already know, a breakaway gap would form at the beginning of a new trend. So when you see a breakaway gap being formed along with a trend continuation pattern, like in this example here, it adds a greater probability to our trade. So coming to the next example, here we see our overbought zone around this area. If you take a look at this example, you see that not all of these 7 candles are bullish. Rather, you see some bearish candles in between. And this condition is perfectly fine when you're applying this pattern on an intraday time frame. But make sure that you take note of these 2 very important things when this type of pattern arises. Number 1 is, out of these 7 candles, only 2 candles can be counter trend candles. If there is more than 2 candles, it's not a valid pattern. And number 2 is, both of these counter trend candles must be a small real body candle. In our example here, we see only 2 bearish candles and both of them are small real body candles as well. So we can take this as a valid trend continuation pattern, and the trend did eventually continue. And in here, as usual, we see a consolidation after our pattern. And if you look at this consolidation, you can see a bullish flag pattern. And this gives us an added confirmation that the trend is going to continue. If you're taking long positions, you can do it at the breakout of this flag pattern. In this last example, after our trend continuation pattern, the price did consolidate and then continued its downward journey. But what I would like you to note here in this example is that, unlike the previous examples we saw, we cannot see any clear consolidation pattern in this. So how do you enter these kind of trades? Well, in our next video, we will see just about that. The next video of Overbought and Oversold series is going to be a full-on trading strategy. To keep things simple and to avoid emotions, we have devised these strategies based on indicators. But that's a topic for our next video. Now, if you like this video, give us a thumbs up. And if you found this content helpful, share this video with your friends and fellow traders who can make use of this as well. Thanks for watching. Have a great life. Thanks.